guys, welcome to the webinar. Today we're going to have a special trading session. We're going to focus on technical analysis. So before we get started, I would like to request that all of you launch your Orbex platform, and that will give you a chance to start trading as we go ahead with our webinar. So I do want to do a quick sound check. Can everybody hear me clearly? Could you please type in the Y for yes if you can hear me? All right, so it does say that Mohammed is talking. It is actually me. My name is Kiana Danielle. I'm going to be your host today. Before we get started, let's actually check and see what has been going on in the economic calendar. It has been pretty much a rather non-busy week. Most of the important reports have been out from the U.S. We had a minor report out from New Zealand. Their global daily trade that was out yesterday was positive. That was a surprise, and after 10 consecutive negative global GDP reports, that was the first positive this year, which did have an upward impact on the New Zealand dollar. However, we still don't know if that is enough to get the New Zealand dollar higher up. Another thing that was a topic today was the US CPI, the Consumer Price Index. That was surprisingly lower than expected. It came in at 0.1% versus there was 0.2% expectation, and it was lower than last month's 0.3%. Actually, as of right now, in about an hour, the FOMC meeting minutes is going to be released. That is supposed to create some volatility in the Forex market, and that could actually give us today a chance to trade, especially because we're going to have a technical analysis session with all of you guys. So if you do have your Orbex trading platform open, we will go ahead and get a kickstart with our webinar today. Let me see what George is trying to ask. The questions here is very hard to get out. All right, okay, thank you for your answer, George. Welcome, Robin. Welcome, Mohammed, and everybody else in the room. So I guess we're just going to get a kickstart and go ahead. Do you have your trading platform open, your Orbex platform? If yes, please do me a favor and go through the currency pairs that you would like to me today to conduct a technical analysis on. If you have any suggestions, I would definitely take your suggestion. We'll start with that. Otherwise, I'll just start on my own, and then you can give me your input on the analysis. As you can see, this is the dollar Swissy chart, daily chart, and as you can see, the dollar fell sharply versus the Swiss franc today. As I said, that was an impact from the lower than expected consumer price index that were out today. But actually, I don't want to look at the daily charts today. We're going to use the 4-hour charts and a little bit shorter term trading, so that maybe you can actually go ahead and play some trades during the session. This is the dollar Swissy 4-hour chart, and let's see what questions we have over here. All right, and I'm going to go ahead from the top of my screen. We're going to start with euro dollar and do a technical analysis on all the majors and hopefully follow up with the other ones. All right, so The first thing I normally do when I want to conduct technical analysis, and only technical analysis, not fundamentals, is to go through all the majors or minor crosses that I normally trade at the beginning of a trading day. Find a trend or a range, decide if I want to trade short-term or long-term, and then conduct technical analysis. We have covered technical analysis before on our Technical Analysis 101 session. I do want to go ahead and give a quick review on what technical analysis is. So basically how we make money in Forex is we make money on the way up, reach a resistance level if we're in a buy position and get out of the market, and also we make money on the way down, reach a support level if we're in a bearish position and get out of the market. And this cycle continues, and that is how you can continually make money trading Forex as a day trader or a longer term trading, depending on your basically time frame. Some of the methods that we use obviously include technical analysis. That means analyzing the markets based on the charts, and we use different tools such as Fibonacci series that we talked about today. The most in our previous webinar, the most important Fibonacci retracement levels are the 61%, 38%, 23%, and also what is not mentioned here is the 50%. Does anyone have questions about Fibonacci? Very good. All right, so Fibonacci is one of the main tools that we use, especially in a trending market. For example, if this is a bullish trending market from here in the arrow up to here, then the chances are that we're going to see a retracement, that the market retraces or corrects itself. Go to one of the Fibonacci levels, specifically in particular the strongest Fibonacci level is normally the 50%, and then it shoots back up. You can make trades either on the correction or during the shoot back up if you are not already in the original uptrend. As you can see, here are some charts available for Fibonacci retracement trading. Examples, we're going to go and apply this to our live trades today. Just these are to give you an idea of how Fibonacci is used. And likewise, in a downtrend, this is how you can use the Fibonacci retracement level. You basically go from a swing high, trace it down to the swing low, identify the Fibonacci levels of 23%, 38, 50, and 61%, and use these levels as pivot points, resistance levels, and even exit strategy for a bullish trade. Other things that we use in technical analysis, and we're definitely going to use today, are the moving averages. There are so many different types of moving averages, including Ichimoku Kinko-hyo. That is my favorite moving average. There are a lot of other types of moving average. They're basically all the same. I like Ichimoku Kinko-hyo because it shows me 5 different moving averages all in one place and give me a clear idea of what is going on in the market. Ichimoku is a Japanese style of trading, and it is a Japanese word. It means a glance at a chart imbalance. And basically these are the items that you can see. And this is the Senko span, which is basically a delayed price action. This is the Tenkan line, the line in black, which is the advanced or fast moving average. This one, the line in pink, is the Kijun line, which is the slower moving average. And then we have the Kumo, which is the span between 2 other moving averages. Again, if you have any questions about Ichimoku, please feel free to ask. Otherwise, we're just going to go ahead and continue with the briefing and go on to the live market. Another moving average type that you may be familiar with is the MACD. And MACD, basically you do the analysis based on the position of the MACD line versus the signal line. And normally, if the signal line breaks above the MACD line, that is a sell I'm sorry, when the MACD line crosses below the signal line, that is a sell signal or indication. When the MACD line crosses above the signal line, that is a buy indication. So as you can see, also pretty easy. Another, now this is not a real moving average, but it's basically an indicator that I like to use is the Bollinger Bands. We use Bollinger Bands mostly in shorter time frames, such as hourly, 30-minute, or 4-hour charts. It doesn't really work well with the longer term frames. This is a relatively new indicator. It was developed or invented by Mr. Bollinger, John Bollinger. He lives in California and he's still alive. So basically the idea behind the Bollinger Bands is that the market always tends, the Bollinger Bands consist of 3 levels, the upper band, middle band, and the lower band. The idea is that the market always goes back to the middle. So if it's scratching the upper band, you can expect the market to go back to the middle. And if it's scratching the lower band, again, you can expect it to go to the middle. So as you can see, this can be a good indication for short-term trading strategies, technically speaking. Another thing that you always want to keep an eye on are obviously the candlesticks, because a chart or a technical chart, it is made of candlesticks, and the candlesticks show the sentiment of the market. A strong bullish candlestick, in my charts I've colored them in green. A strong bullish market, hold on one second, we have a question over here. All right, thank you, Mama, for your response. So a strong bullish candlestick normally doesn't have a shadow coming in or out of it. We call it a marubozu. It means completely shaved, and this shows a bullish sentiment in the market. A lot of traders are buying in that market. These obviously can also be used in any other kind of charted market, such as stocks, equities, commodities, and so on. A bearish candle with no shadows coming from top or below it is called a bearish marubozu, showing or indicating a very strong bearish sentiment in the market. Indecisiveness is formed by a spinning top, which has a very, very short body and very long shadows. The markets basically don't know what direction to go. The bulls and the bears are either equally as strong or equally as non-attentive or not interested in that market, and that is when a spinning top or a doji happens. And these basically could indicate a calm before the storm, and the candle that comes after these type of spinning tops can basically indicate the next trend in the market, and we can use them as reversal candlesticks. Bullish reversal candlestick patterns, we have covered them before. Morningstar, bullish engulfing hammer, and bullish harami. What they do is that they create a pause during a downtrend, and they indicate a new long trend in the market. Similarly, a bearish reversal candlestick, including evening star, shooting star, hanging man, bearish engulfing, and bearish harami, they create a pause during an uptrend and indicate that the market is going to change direction and move into a downtrend. Any questions up until here? I would gladly answer any of your questions if we have time over today's webinar. Otherwise, I am going to go ahead and show you our charts. So if you have no recommendations from me, I am going to start with the euro dollar and see what we can do. So this is the euro dollar 4-hour chart, and this is basically, I have added nothing to it yet. I already am in a position, but that is more of a longer term, so I'm going to ignore that. What I'm going to do right now, first things first, I'm going to add an Ichimoku Kinkohyo. If you do have your Orbex trading platform open right now, you can go ahead and try everything that I'm doing as I'm doing it, because practice is the only way that you're actually going to learn to become a trader and make trading positions on your own. So we added the Ichimoku Kinkohyo to our chart. What does this tell us? On the first glance, I can see that the price action, the prices of the euro dollar have entered the Ichimoku cloud in blue right over here. And we all know what it means when the market enters the Ichimoku cloud. That is an indication of consolidation, which is not surprising because the London session is just about to, it just already closed. So it is no surprise that the euro is consolidating at the moment. But another reason why the euro is consolidating versus the dollar is basically lack of economic data in the past few days. But before that, what happened? We can see that from last week, the market actually broke above the Ichimoku cloud, which is a bullish indication right over here, and then we went up to this level. So what are these levels anyway? We want to go ahead and check our support and resistance levels based on the short-term basis. So how do we set support and resistance levels? One of the things that you can do is to go back to longer time frames and see what the market has been doing before, or what are the key levels that the market has tested prior to this date. We can go as basically as we can zoom out as far as years in the past, but because today we're doing our analysis in the 4-hour chart, I wouldn't go anywhere beyond a year in the past, and I'll try to set my support and resistance levels based on the key levels in the past year. So together, please point out to me if you can see them, the levels that you can see. Just looking at this chart, this is the daily chart, the first thing that I see are the tops, or the swing highs. This is one swing high right over here that the pair tested back in May 2015, and here is another swing high back in June 2015. And obviously here back in February we had this swing low, the swing high at around 115. What else do we have here? Then we go for the swing lows, the bottoms of the market. As you can see, the market has moved a lot in the past year. In March, it dropped as low as 1.05. It tested around that level one more time, but a little bit higher up in April at 1.06. And then it moved up, actually, broke above the Ichimoku cloud and tested around the 1.08. Then again it tested this level around 1.08, and now the range basically is getting smaller and narrower. Basically it has fallen into a consolidation even on a longer term frame. So how can we use these swing highs and swing lows to come up with a trading strategy? It's very simple. I'm going to switch back to the 4-hour chart, but before that I'm going to mark these levels by adding a horizontal line. Please go ahead on your Orbix trading platform and add these levels. So as you can see, this is a range, for example, in these two swing highs. There are two ways that I can use this. One is that I can connect these not in a horizontal manner, but actually there is another more recent swing high right over here. So as you can see, the swing highs have been moving lower and lower. That means I cannot create a horizontal line, but what I can do is connecting the swing highs that can create a sloping resistance level right over here. It doesn't quite fall into the line, but it is not that bad. But how about the swing lows? I'm now, right now, as you can see, focusing in this area from back in May until now in the euro-dollar pair. The swing lows have been not really arithmetic. It has been going up and it has been going down. What do we see over here? Since this has been going up, down, and a little bit higher up, I really don't believe that this can make a downtrend over here, or it can fit in a falling channel for us. Therefore, I'm going to ignore this one and go back and connect all the lines from back in March that kind of looks like they have been moving up. You see? So by doing this, what did I create? The space between these two lines, if I extend it, what's going to happen? They're going to connect. They're going to connect around here. What does these two lines remind you of? We have covered this before in our, I believe in your Orbex Trading Library, we have covered this. This is called a triangle, and it's actually, in fact, a symmetrical triangle. And a symmetrical triangle is indeed a sign of consolidation. So far, we have had a few solid consolidation indications. One being the Ichimoku cloud that is flattening over here, and the fact that the prices have been moving inside a triangle. So that means that we're going to be better off range trading the euro dollar and not waiting for a trend, because it is obvious that there is no trend, no real long-term trend to be identified over here. So what are the ranges that we can trade? Right now the price is at approximately at the 1.10 level. So what I'm going to do is to identify the support and resistance levels based on the previous tops and bottoms in the market. This doesn't have to be exact as for now. I'm just going to point them out as close as I can see. I'm today going to use the bodies and not the shadows, but there is never an exact point that you can point out to, because the markets don't normally fall back exactly to the same price level, but in the range of that price level. I'm going to just round it up, bring it back to 1.08, and from the monthly chart, this is about as good as I can get. The pivot level is not really clear. Another thing I wanted to do is to, based on the previous trend that the euro dollar had, which was a downtrend, which started back in 2014 in May, I'm going to go ahead and use the Fibonacci retracement level to also use that one as our support and resistance or key levels that we can use in our trading. So here I go. There's a freehand Fibonacci retracement, and I'm going to see how it falls with the support and resistance levels that I casually identified with the naked eye. As you can see, the 23% Fibonacci level has fallen right between the two the resistance levels that I casually identified. What I am going to do right now is to actually make some changes based on this. Or maybe not. I would bring up one of the resistance levels to 23%, and what I identified before I'm going to use as a pivot level right over here, which actually does perfectly coincide with the upper level of the Ichimoku cloud. Alright, so as you can see, this is actually exactly where I got into the market and entered a short position prior to this back in July. But the market sentiment has not been good enough. I have been eyeing the 1.05. As you can see, the sentiment and the volatility is getting lower and lower, and I do want to bring up my bearish target a little bit higher up. Probably we're going to see where is going to be the best place to bring it up to. So now we're going to move back to the 4-hour chart, which we originally intended to do the technical analysis. The 4-hour chart basically zooms out. Zooms in the market and shows us, breaks down the market volatility per every 4 hours. That's why the triangle and the patterns that we identified before are looking gigantic in the 4-hour chart. So it doesn't really make sense. I'm going to get rid of the circles that I used for identifying the tops and bottoms of the market, because we already used them for our support and resistance levels and to identify the triangle. And now in the range trading, this is going to give us a better idea as to what we can do. So as you can see, the Ichimoku cloud obviously changed the shape as I switch into 4-hour chart now. I can see that you've raised your hand. If you have a question, definitely go ahead and please type it in the question side. I'm sorry about. Why don't you go ahead now and write your question in the chat box so that we can see what you're trying to ask us. So back to here, as I said before, the best strategy for the euro dollar right now seems to be range trading. And if you're not already in the position right now, today could be a good chance for you to get into a short-term position in the euro dollar. We already identified some of the levels, some of the key levels, including the 23% Fibonacci that is right around 1.12. We have the 1.10 over here, and we have the 1.08. So the reason why I switched back to 4-hour chart is because in the daily chart, we don't really understand and we can't really appreciate the pair's movements in a range. And that is the reason why I moved back. So what we can see over here right now is that the pair has definitely been ranging within the triangle, and it recently broke below the pivot level at 1.11. And it is right now inside the Ichimoku cloud testing the lower level. And if you look at the historical chart, you can see that the market has basically going up and down, has been testing below and above the Ichimoku cloud for quite a while. So what we can do right now is basically wait for another solid indication of what is the market doing right now. Look, the market was basically going up, and now it seems to have started to move back to a bearish or a downtrend after forming a double top. You see, now the good thing about the 4-hour chart is that we can see more details in the chart. Right over here, we have the formation of a double top. If you can't see it, I'm going to point it out for you. This is the first top, and this is the second top. And as you know, a double top is a bearish reversal chart pattern. Hold on 1 second. All right. So yeah. So this is a double top. It's a bearish reversal, and what happened here is that the market indeed get into a bearish trend. It broke below the neckline, and which actually fell right on the pivot level at 111, and it is now consolidating within the Ichimoku graph. So this doesn't give me enough information technically as what I can do. So another thing that I can do to identify more short-term levels in the market is using this, the most recent trend in the market on the daily chart, on the 4-hour chart, using the Fibonacci to see what other levels I can expect for the pair to test. All right, so here it shows me that the market, the euro-dollar pair, has already broken below the 23% and 38% Fibonacci levels, and it is right now actually testing also the 50%. So this also falls very perfectly with our Ichimoku strategy, because the 50% Fibonacci level, which is the most important Fibonacci level of all, falls perfectly and aligns perfectly with the lower band of Ichimoku. So this basically shows me again that the market has yet to find its way, whether it's going to go up and break above it and move further within this triangle, or it's going to break down and move towards the 61% and go all the way back to the lower band of the triangle, of the bigger picture triangle that we identified before. So again, I didn't get a clear indication. As of here, I wouldn't actually consider getting into the market. Some people would go ahead and get more indications and add more indicators, such as, let's say, the RSI, and see where the market volume is. So as you can see, the market, the RSI is actually kind of bullish right now. It is moving towards the neutrality area at the 50 zone. So basically, the RSI is also showing us consolidation. That's why, unfortunately, euro-dollar in a short time frame doesn't give me an appetite to trade. However, my strategy is to wait for an indication. This is what you want to write down at the moment. So what I'm going to do right now is to wait for a confirmation. When is the confirmation going to come? The confirmation is when the prices break. A bearish confirmation would be a break below the 50%. And in that case, I'm going to set my limit, my take profit order, somewhere between 1.08, like somewhere between or within the triangle, because the market is obviously moving within this triangle. So depending on when the market is going to break below the 50% Ichimoku cloud, which is the 1.010, my target would change if I'm using the triangle strategy. If I'm using the more fixed and more risky but more rewarding strategy, I would go ahead with the support level at 1.0875 and set that as my bearish strategy. Again, I'm confirming over here that this is not a strategy. This is an if situation. If the market breaks below the 50%, that is when we can go ahead and place a bearish position. That can happen today or tomorrow after the FOMC members talk, and if the US dollar sees a little bit more positive outcome, because this week we don't have many or much economic data out of the Europe, and the euro-dollar pair is mainly being moving based on the US dollar strength, which has not been really good in the past 2 days because of the negative economic data that we've been having today and unfortunately yesterday. So an alternative scenario for the euro-dollar pair would be a break. Well, first of all, again, a bullish scenario for the euro-dollar pair would be less rewarding because the pair has been moving within the triangle, and as you can see, it's closer to the upper band of the triangle. So since it has been consolidating right now, even if we say, okay, if we are waiting for a break above the Ichimoku cloud, that will give us only a very short or a very limited amount of pips for our exit strategy because we want to remain within the triangle. So I wouldn't go ahead for an alternative in a range trading form. However, if the market does break above the triangle and the 23% Fibonacci level, that would change my outlook entirely, and in that case I can actually see further up moves towards our next resistance level at 1.14. Again, that is not the strategy right now. That is if the euro-dollar pair breaks above 1.12, then I would target 1.14 as an alternative bullish strategy. You can definitely, if you want to be up to date about the markets, you can definitely follow me on investiva.com. I do send out daily updates about my most recent positions. You can subscribe on investiva.com and get our updates. Orbix also provides technical analysis mostly on a short-term basis via email as well. So you can keep an eye for that one. Look at that. Right now the market, the 4th hour started again, and we are having a slightly bearish price action over here in euro, which further confirms that consolidations of the candlesticks basically have been bearish, bullish, bearish, and remaining within the Ichimoku cloud. Just for the heck of it, let's go even shorter term and look at the hourly chart. On the hourly chart right now, as you can see, actually, with this hour just started, the new hour just starting, I can see a formation of a double top actually, which could be an indication of further drops. On an hourly basis, which is even shorter term than a 4-hour basis scenario, we are having a very strong bearish sentiment. The pair tested the Ichimoku cloud, couldn't enter it. So chances are that if you're going for a very short term for smaller amount of pips, chances are that we can see further drops in the next few hours, in the next 5 to 6 hours. So if you're eager to make a trade right now, that would be our strategy as of now. I would get into the market right now. I would aim for the 50% Fibonacci level right at 1.010. So there you go. If you're eager to do a short-term now, to execute a short-term trade, this is the place to be. So the market is pulling back a little bit. I would recommend that you wait a little bit before you get in so that you can maximize your profits before getting back to the 50%. I cannot guarantee, but I'm pretty confident that the market is definitely going to go back to 110 at least. Don't forget to, if you are using this strategy and if you are getting into a bearish rate right now, don't forget to set your stop loss order. You can set it at 111, which has proven to be one of the key resistance levels. So basically, this is going to be our strategy. We're going to get into the market somewhere at 110. I would say let's get into the market at 110.50, right around here, because the price action is pretty. You see, it just actually touched that price. So if you can go ahead and set to get into the market at 1.1050, get out of the market at 1.1026, stop loss set at 111. That is our short-term, very short-term strategy for the euro-dollar pair. All right. So do we have any requests for coverage of another currency pair? Because I am going to go and focus on the next currency pair to do another technical analysis for you guys. We have a great crowd. Okay, I can see Robin. Thank you for Q&A. Nice presentation. What is the shortest time frame you trade off all position trades? Thank you. The shortest time frame that I trade off is, if I really want to go short term, I go 4 hour. I rarely use a 1 hour chart for trading. I am, based on my own personality, I am a long-term trader. I trade off the monthly and the daily charts. I hold my trades anywhere between a week to 2 to 3 months. But that is only because of my schedule and the way that my personality requires me to trade. George is asking, do you think the pound is as bearish as the euro? Well, that is a great question. We can, George, we can go ahead and take a look at, let's take a look at the pound dollar. I actually just yesterday had a analysis on the British pound. If I go to, I'm gonna just show it to you right now on investiva.com. So the British pound was definitely ranging for quite a while within an upward channel. So to answer your question, actually no, the British pound is mostly seemed to me to be bullish rather than bearish. The UK has been doing pretty well. The economic points show that the UK is one of the few economies outside of the US that may actually rate hikes pretty soon. And versus the US dollar, it is a little bit vague, because both the pound and the US dollar are mostly on a bullish longer term, have a bullish longer term outlook. However, if you look at the pound, let's say versus a neutral currency pair such as the yen hasn't really been moving, and the pound has been very strong. So as you can see, the uptrend is more visible in the pound. Again, we're talking long term. So George, is your question about pound being bearish? Well, obviously today the pound was bearish, but are you asking more about the longer term view or the shorter term view for the pound? If you're asking about the shorter term view for the pound, long term, all right, long term, the pound versus the pound itself, if you only look at the fundamentals, actually appears more bullish to me. Looking at it versus the JPY, as you can see, it has been moving above the Ichimoku cloud, and if I can actually see, I can fit the price action, the highs and the lows within an upward channel right over here, right? So an upward channel above the Ichimoku cloud. What happened over here? And the break above the pivot level at 191 basically gave me a bullish outlook on the British pound versus the Japanese yen. But let's not limit our analysis to that. Even the British pound versus the US dollar is moving within an upward channel, and that only shows me that the British pound is even stronger than the US dollar. I mean, it has been ranging for a while. So the article that you saw on investiva.com was basically talking about the end of a range right over here within this box that the pound dollar was moving within. This was a rectangular pattern around here, right? This is the rectangle, and then we had a bullish engulfing pattern yesterday that indicated that the market might break above it. Today we had a spinning top, so we're still not quite sure. The market continues within the range versus the US dollar. So yeah, the British pound and the US dollar seem to be quite as strong as one another. So it may not be a great candidate for a long-term trend trader. However, it could be a good candidate again for a range trader because it has definitely been ranging within the rectangle. Let's see, we have other questions over here. Hold on one second. My computer has become very slow today for some reason. I'm trying to see your questions. Anyway, so yeah, that is my view basically on the British pound. It is moving actually right now versus the US dollar. I think this is the reason why is because the traders are getting active right before we have 15 minutes until the FOMC minutes are going to be released. So that is the reason why we're seeing a bit of an action in the US dollar pairs. Right. So let's actually take a look at the British pound versus another neutral currency at the moment, which is the Swiss franc. Pound Swissy. Ooh, pound Swissy has been on an overall uptrend as well. It has been having a bad day today. That could be a result. Oh no, okay, British pound itself has been having a bad day today. However, in the long term, as you can see, the British pound versus the Swiss franc also has been on an overall uptrend. So we could see further up moves for the British pound. You're welcome. And thank you for the great question, George. So since we've been talking about British pound, let's do a quick technical analysis on British pound versus the Swiss franc, let's say, on a daily basis. So again, if you have your Orbex trading platform right in front of you, please go ahead, switch it to British pound versus Swissy. Add the Ichimoku cloud to see where the market stands. All right, the market remains above the Ichimoku cloud. The cloud itself on the moving averages have been moving up. The Kijun line has been moving up, has yet to break above the Tenkan line. We have broken above a key level right over here. So as you can see, we had a swing high at 150. Let's round it up, 150.50. That is ironic. Which also happened to be a support level back in the day before the jawboning of the Swiss franc. I'm going to mark it up for you right now. That didn't quite fall into the level that I wanted to. All right, we're going to move this to the actual swing high back in March. As you can see, we had a spinning top formation followed by a bearish candlestick. So this is one of the levels. That is the reason why I'm choosing this level as a pivot level. And the market broke above it. So that is further indication that the market probably is going back to the levels of before the job owning and probably will remain within this level and trade within the range as it used to trade before. So the levels that historically the pound and Swiss franc used to trade, if we zoom out a little bit, is basically this. This is the level. If you zoom out even further more, right. This is a little bit further of a trend, uptrend. This is the key resistance level right over here. And again, this is a longer term outlook. We're going back all the way to 2014 and 2012 to identify the support and resistance levels in a longer time frame. And then we're going to go back, zoom in, and see what we can see in the markets right now. So as you can see, the British pound versus the Swiss franc isn't as linear as it ever has been versus the euro. So it does create better trading opportunities. So here, I'm going to go back. So now I identified two levels in the British pound versus the Swiss franc. Now I'm going to zoom back to the 4-hour chart and see what is going on. Robin is asking, hi Kiana, what with major weakness in the euro and the US dollar, both of these assets seem dangerous to trade these days with the respective debt levels. Do you think a longer term trade is prudent? So I'm actually glad that you guys are asking questions because I would have wanted to have this session for a Q&A. So in a longer term, the euro definitely has more weakness, seems to me, than the US dollar. The US dollar, even though this week we have seen some weakness, however, in a longer term frame, the US economy is not doing that bad. It has overall been doing good. It hasn't been as good as expected, but the employment has been picking up. The unemployment claims have been dropping, and the inflation is getting, it has yet to get to the Fed's aim, to the Fed's goal, but it is gradually picking up. And the reason why people are anticipating a interest rate hike in the near future. So in a very long term, most analysts are looking at a bullish sentiment for the U.S. dollar. Not only the U.S. economy is doing well, but also the oil prices are on the verge of dropping even furthermore. And since the oil prices have a reverse relationship with the U.S. dollar, and especially if the Iran deal, the Iran nuclear deal falls into place, we can expect even further drops for the oil, which will eventually bring up the value of the U.S. dollar. So I agree with you that the euro is more of a risky asset right now because, yeah, there have been some more and more agreements with the Greeks, but we don't really know what is going on. It has mostly been consolidating. But as for the U.S. dollar itself, I have been trading it versus the commodities such as the Aussie dollar and the New Zealand dollar. The reason why is that I am most, on a longer term, I'm bullish on the U.S. dollar for the reasons that I said before. In a shorter term, well, in September, we have 2 weeks until, well, about 2 weeks to a month until the Fed decides if they're going to raise their interest rates in September. We could see a bearish sentiment if the interest rate hike doesn't happen in September. But I believe that by the end of 2015, in general, we could see further up moves in the U.S. dollar, especially versus the weaker currencies such as I said, the Kiwi dollar and the Australian dollar versus the British pound. That could be risky because the UK is also seeing improvements in their economy. So two strong currencies normally don't make for a good pairing. You normally want to go, you want to identify a weak currency and trade it versus a strong currency and go with that trend. Or a strong or a very weak currency versus a neutral currency at least. The neutral currencies right now among the majors are the Swiss franc and the Japanese yen. The bearish, mostly, the currencies under pressure are the ones who are in direct relationship with China. Basically, the Asian currencies, especially the Australian currency. And as you can see over here, the Australian dollar has been in a falling channel, and that is the reason why I have been in a bearish position for such a long time in the Aussie dollar, and I've been green on that one. With New Zealand, this has been a little bit tricky because it fell into a consolidation, and even though we saw all the downtrends, it fell into a consolidation at a major support level at 0.65, and it's been difficulties moving or breaking below it. And the New Zealand economy, as I covered in Investiva today, saw some positive reports today, yesterday actually. Their global dairy products picked up after 10 times of consecutive negative reports, negative printing, and that is the reason why we have been seeing some up moves in the New Zealand dollar, so that is a little bit tricky right now as well. But as I said, and to answer your question, the US dollar, mostly I am bullish in the longer term. We could see a pullback in September, especially if the Fed decides not to go ahead with the interest rate hike in September. But as a lot of analysts are predicting, if not September, the Fed is almost certain to raise their rates in December at least. All right there, everybody, thank you so much for attending today. We had a great turnaround with a lot of good questions. Thank you for attending and thank you for asking questions. If you have further questions, I am going to bring up our Orbex logo. Do send your questions to info@orbex.com, or if you want to contact me directly, go to investdiva.com and send me an email, or I don't know, sign up for daily emails or what have you. Trade responsibly, and I will see you next week in our next webinar about the fundamental analysis of the currency pairs. Have a great day.